Everyone's obsessed with next week's Fed meeting, next month's earnings, or the latest headline drama. But here's what they're missing. Real wealth isn't built by reacting to noise. It's built by positioning yourself years ahead of the crowd. So today, I'm fast forwarding to 2026 and sharing 7 stocks I believe could be big winners over the next 1 to 3 years. These are not memes. These are real companies with real growth, real products, and real long-term potential. Some are risky, some are expensive, one is deeply hated right now, and the last is a small cap moonshot that could either 5 or 10 times or go to zero. I'll break down the why, the valuation, and how I plan to buy the dips. Let's get into it. Stock number 1, SoFi Technologies, ticker SOFI, the digital bank disrupting everything, and I genuinely believe this could become one of the most important banks of the next decade. Traditional banks were built for a world that doesn't exist anymore. Brick and mortar branches, paper applications, legacy technology that moves at a snail's pace. SoFi is different. One sleek app that handles checking, savings, loans, credit card, investing, and even crypto. It's exactly what generations want, and legacy banks can't compete. The numbers tell the story. SoFi has grown to over 10 million members and is expanding at 30+% annually in both revenue and member growth, with particularly strong momentum in fee-based revenue. From a valuation standpoint, yes, SoFi trades at multiples far higher than traditional banks, but remember, this is a growth company, not a value bank. When you're growing members and revenue at these rates while improving profitability, premium valuations can make sense. My strategy, I don't chase SoFi on green days. I wait for fear, I wait for 10 to 20% pullbacks, and I scale in slowly with small positions. This is a multi-year bet on the future of banking. Stock number 2, Palantir, PLTR. My biggest regret and why I'm coming back, this one hits different for me. I owned Palantir early, about 400 shares at a cost basis under $8. I believed in the vision, but during a difficult period of my life dealing with a serious health issue, I sold to reduce risk and stress. The stock absolutely exploded after I sold, and that hurt. But here's what hasn't changed. Palantir is now crushing it with over 60% revenue growth, US commercial revenue surging over 90%, and becoming central to the AI revolution. Governments, militaries, hospitals, and Fortune 500 companies rely on Palantir's AI-powered platforms to make mission-critical decisions. This isn't hype, this is real, sticky, essential software. But let's be honest about the risk. The valuation is stretched. The market is pricing in massive future growth. That means 2 things can both be true. Palantir could still be an incredible long-term winner. Also, the stock could easily drop 20 to 30% if expectations cool. My strategy, I'm not chasing this at current prices. I'm waiting patiently for meaningful pullbacks, 20 to 30% drops before I start rebuilding a position. If AI adoption accelerates into 2026, Palantir will still be a massive player. Stock number 3, Celsius, ticker CELH, the health drink taking over one of the most explosive growth stories in consumer products. This isn't just another energy drink, it's a zero sugar, health-focused brand tied to fitness and lifestyle. That's why it's capturing younger, health-conscious consumers who would never touch a Red Bull or a Monster. The company achieved record quarterly revenues recently with strong growth rates and just announced the acquisition of Alani for $1.8 billion, combining 2 of the fastest growing energy brands. From a valuation perspective, Celsius looks expensive on trailing earnings, but far more reasonable on forward earnings because analysts expect very strong profit growth over the next few years. That's the perfect example of why forward PE matters. My strategy, I don't chase green candles. I scale into Celsius during deep pullbacks, roughly 25 to 40% from recent highs. It has been a very volatile stock. I plan to hold for the long term. If they keep executing, this could be a multi-bagger in the next few years. Stock number 4, Advanced Micro Devices or AMD, the AI chip beast. In my opinion, this company is in the strongest position it has ever been in. AI, data centers, gaming, cloud computing, high-performance chips. AMD is positioned in every major growth trend in technology right now. The data center segment recently posted record quarterly revenue with strong double-digit growth, driven by demand for both AI accelerators and server CPUs. CEO Lisa Su is one of the most respected leaders in tech, and AMD continues taking market share. From a valuation standpoint, AMD trades at a premium to the broader market, but its growth rate makes that premium very reasonable in a long-term context. This isn't a trader's stock for me. This is a builder's stock. My strategy, I accumulate AMD during broader tech pullbacks, typically 10 to 20% corrections, and I plan on holding this long-term as a core position in 2026 and beyond. Stock number 5, Enphase Energy, ticker ENPH, and this is my contrarian pick. This stock has been absolutely crushed. Solar sentiment is terrible. Interest rates hurt demand. Investors have abandoned it. And that's exactly why I'm interested. Enphase remains the global leader in microinverter technology with strong gross margins over 50%, and the company is expanding internationally while launching innovative new products. Solar energy isn't going away. It's just in a painful down cycle. Governments are still committed to clean energy. Rates will eventually normalize. Demand will return. And today, Enphase trades at a far more reasonable valuation than it did during the hype years. My strategy, I'm not trying to call the exact bottom. I'm simply dollar cost averaging slowly while sentiment is low. And I'm giving this one several years to recover. When the narrative flips in solar, these stocks can move violently to the upside. Stock number 6, and a favorite of mine on this list, Amazon, ticker AMZN. And honestly, it's almost boring at this point, but that's why it's so powerful. Amazon isn't just an online retailer. It's a cloud computing giant. Through AWS, a digital advertising powerhouse, a logistics monster, and a key player in AI and robotics. It's one of the most diversified and infrastructure-heavy companies on Earth. From a valuation standpoint, Amazon trades at much more reasonable multiples than many high-growth tech names, usually in the low to mid-30s on a forward earnings basis. That's incredibly attractive for a company with this kind of dominance. My strategy, I build Amazon positions during broad market pullbacks, 10 to 15% corrections, and I use it as my long-term backbone for my portfolio. This is a sleep at night stock for me. And finally, stock number 7, BigBear.ai, ticker BBAI, the high-risk moonshot. And let me be very clear up front. This is not safe. This is not conservative. This is pure speculation. A lot of people compare BigBear.ai to Palantir in its early days, not because they're the same company, but because they both sit at the intersection of AI, government contracts, and data intelligence. This doesn't mean BBAI will become the next Palantir, but it does highlight the kind of potential and the kind of risk we're talking about here. BigBear.ai operates in artificial intelligence for defense, cybersecurity, intelligence systems, and government applications. They have real contracts and real technology, but they're still a small, volatile company in the early stages. That's also why the upside could be enormous. If they continue landing government contracts and executing well, this could become one of those stocks people wish they bought when it was tiny. If not, it could fade away. My strategy, very small position sizing. I only buy during deep pullbacks of 25 to 40% when pessimism is at its highest. This is a speculative lottery ticket, but I'm okay with that for a tiny percentage of my portfolio. Let me be crystal clear as I close this out. These are not guaranteed winners. SoFi is sensitive to economic cycles. Palantir is priced aggressively. Celsius faces intense competition. AMD battles Nvidia. Enphase is a struggling sector. Amazon faces regulatory pressure. And BigBear.ai is pure speculation. That's why we diversify, scale in slowly, buy dips, and hold patiently. 2026 is right around the corner, and the investors who will win big aren't the ones reacting to headlines. They're the ones quietly building positions while everyone else is distracted. If you want to see how I'm personally tracking these positions, how I size each one, and my monthly updates, make sure you subscribe. This isn't financial advice, it's just my personal research and my opinion, so always do your own due diligence before investing. Thank you so much for watching. If you're not sure what to watch next, check out another of my videos right here. Take care, and I will see you in the next one.